Hello traders, welcome to another video of Greenback Riders Trading Academy. Today we will be going over gaps, channels, different setups. Stay with us till the end of the video, and we have discussed different entry setups, different ways to manage your trade, how to read the market, how to define your balance zones, how to trade in and out of your balance zones. So there are a lot of concepts that has been discussed in the video today. So stay with us till the end of the video to go over all the concepts that has been discussed. As always, please like, share, comment on the video and subscribe to our channel. If we are looking at this 4-hour chart right now, we see that we are in this nice channel, right? This is the channel that we have. Now, what has happened is when you have drawn a channel, what you need to do is you need to pay attention to this middle line, right? So if you see, we went up till here, and then we started faltering a little bit. We came below the middle line of the channel, and we did not touch it. However, what was the status on Friday morning? Friday morning, this was the bar. This is a complete range bar, right? So there are buyers below and sellers above, and somehow this candle got formed. So when you have a higher time frame in a trading range, you have to expect that you will get a trading range in your lower time frame as well. So when you are trading on the 5 minutes chart, you will have to define that, okay, this is the trading range top, this is the trading range bottom, and you can do it based on this candle itself. And along with that, you need to know what is the midpoint of my trading range, right? And that came out to be around 53.5, which has been a support, but right now we see it has been broken by the 4-hour chart, and we'll have to see what happens. However, even if we say that this is not a channel and this is actually a wedge getting formed, if we draw the wedge line from here, we see that we have one touch, we have two touch, we have three touches, right? However, this was a part of the downtrend. This was a part of the downward channel. So there is still a chance that the wedge, many machines are looking at the wedge starting from here, and they finally want to make a third touch here before even a serious downtrend begins, or even if they want to come bring it down to some lower levels, right? So there is still some chance for this thing to go up. Since we were at the bottom of this channel, and this channel was touched only once, so at this point of time, even if you consider this as your channel, say you consider this as your channel, so this is the first break of the channel, right? So the first break of the channel normally goes up, and since I consider this to be the channel, at that point of time my expectation was that since we have come to the bottom of the channel and we have migrated from this line, or we did not even touch this line, right? But we came below the midpoint of the channel. So the idea was that it should try and go and touch the midpoint of the channel again. So let me redraw the channel here, and you'll see what I'm talking about. So if this was your channel, you had to come and touch the midpoint of it, where again it is the top of your this range bar, right? We went up a little bit and we came back all the way down, and it is again possible that it will come and retest this line again or this line again and bounce from there. Apart from that, what I also see is what are the present gaps that we have in the system, right? So on the 4-hour chart, if you see, this is the big bar, right? This is a breakout bar. This broke out of this high. So at this point of time, I have this gap created, correct? And if you see, price is coming inside the gap and it is pushing up. As long as it does not close below this gap and gets a follow through, I would consider this gap to be open, right? I do not care about the ticks. The ticks are coming down. Even if it closes once below this candle, right? Even if it closes once below this candle, remember, whenever there is a gap, if there is a bullish gap, bulls are actually below the gap, right? So they created this candle and they trapped the bears here. They created this candle, so they started buying here. So actually, only one candle peeking out of this area, which is your gap, does not make any sense to go short as long as you do not see a follow through. Now I am looking at the 4-hour chart, right? And on the 5-minute chart, it can easily go and do something like this. It can come back here, it can go and retest this, and then it will start coming down here. So this I'll consider that the gap has been rejected. And once the follow through happens, I will say, okay, this gap is there no more. Now I will start looking at the bearish gap that it created, right? If you see, in order to move up or move down, you either need a gap to be created on the bullish side or on the bearish side. So we all know that market moves from a, let me draw it here. Market, see, this is a balance zone here. A balance zone is where price has created a trading range, right? And then you have another balance zone here. This is where price created another trading range. Now what I do is I take care of this balance zones, or I mark this balance zones on my chart on the higher time frames. I look at the daily if there is any balance zone created or any gap created. I look at the 4-hour chart to see if there is any gap created. I look at the 1-hour chart also to see if there is any gap created. And whenever the gaps are coinciding, say the 4-hour is coinciding with the daily, or the 1-hour is coinciding with the 4-hour, or the 4-hour, 1-hour, and the daily are coinciding together, those are the points of confluences which is going to provide you a strong level of support or resistance, right? So at this point of time, if you see, this is from this high, this line to this line, we are in a balance zone. We are not closing below it, we are not doing anything, and this balance zone is right above this gap, which is telling me that there is still a possibility of this thing to run up, complete the wedge. Even if you say that the wedge is not this channel, of course, this may not be the wedge, and some systems may be looking at this as the wedge, right? So there is a chance of this to go and hit this line somewhere and then come down. Correct. Now, in order to move out from this balance zone to this balance zone, a gap has to be created. If a gap is not created, that means the bulls are not strong enough to come out of the balance zone and give you a follow through in order to reach the next balance zone, right? So why is the follow through so important? Think about it. When you are in a balance zone, you are moving out of it, you are creating a breakout bar. Now a breakout needs a follow through. That follow through is actually defining the gap that is getting created between the previous candle of the breakout and the follow through candle of the breakout. So that is how we are saying that, okay, a gap has been created. It may very well come down to the point where the breakout happened, and when that happens and the candle comes and touches the breakout point and goes and creates another bar which has a distance between the breakout point and the close of the bar, that is your breakout gap. Okay, I will show that that also happened on Friday's chart. Okay, now let us go to the, so on Friday at 8:45 in the morning, this was our candle, right? We were somewhere here and we were expecting that the price will go up. Okay, so that I was already bullish in that scenario. The other thing that I do is whenever there is a day which has CPI, PPI, and NFP, any these kinds of data, you will see that the displacement or the range candle that gets formed on the higher time frame is actually huge. Okay, so what happens is, if you are looking at it, if you are looking at it here, see, it came to the balance zone and it is sorry, this is the gap, and it is getting support in the gap. Now the idea here was that we are bullish, we have come to the bottom of the trade, this is the bottom of the trading range, this is the top of the trading range, and we know what, on the lower 1/3 of the range you have your buyers, and your upper 1/3 of the range you have your sellers, correct? So if I remove this now and I draw my fib here on this chart, and I bring in my 66%, One second. Where is my 66%? Okay, let me make something as 66%. 0.66, and let me make one more as 0.33. Okay, so this is my sell zone, this is my buy zone, correct? So we were already in the buy zone. Now, if we go back to the, now what I do is after I have done this, I now go back to the 1 hour chart. Now on the 1 hour chart, what I see is, where is the box? Here is the box. What I see is this is the bearish zone that got created. So if I am saying that I am bullish on this day, if I'm saying that I am bullish from here, what is my first target? My first target is in this area. It should come to this balance zone, or at least, and the more reason for this to come back here is, see, if this balance zone, this gap got created, this bearish gap got created, we came down, we retested the gap. If you're trading on the 4 hour chart, this is where your stop order should sit, or you can get in with the limit order with this as a stop loss. Correct? If you have two candles closing above this, you will be out. But then it's a 4 hour chart, and these are large areas where you can actually make good profit in the 5 minute time frame. Correct? So this is how we look at it. Right now, if you see, we went above, we went up there. This is the first candle that broke. This is the first candle that broke it. We did not get a follow through. This is the second candle that tried to break it. We still did not get a follow through. So I am saying that this gap is still open. If we came down the gap, we retested above it. This is where the sellers are. We retested above it and we came down all the way again. Okay, so this was the area that I was looking for. And if you see, this is again in the 6.9 to 6.7 area, which again falls in our generic support resistance areas. Right now, let us go back with this in mind. Let us go back to the 5 minute chart. Okay, what I also keep on the chart is I keep a multi EMA indicator. I keep a multi EMA indicator, this one, multi EMA with labeled any time frame, and I am on the ETH chart. So what I noticed in the morning here is the 4 hour EMA got broken down and it came back up immediately. This is the 9:30 candle that happened, right? So we gapped down another 20 points. So the idea was that we should be going up. We have gapped down 20 points, so it should go and touch somewhere in the RTH 20 EMA, right? However, on the 5 minute chart, this is now my bullish gap. So when the price came down to this, and if you look to the left, you will actually see that there is a balance zone here, right? Price was moving sideways. If we extend it to the right, this is the same place where this candle came and dipped. Now we have this balance zone here, we have this body gap created here, we have this 4 hour EMA created here, 4 hour 20 EMA here, and then we have this nice inside bar. This is where we went long, right? This is where we went long, and our stop loss was 1 point below the 9:30 candle. What is the first target? After you get to such a strong bar, your first target is the top of this bar. So we took profit there. Now this candle breakout. Now here is what the here is how the breakout gap happens, right? So this candle broke out of the top of bar one. Now we are using the RTH logic here, and we got a follow through. Once we got a follow through, I added one more contract here. Now see what happened. This was your breakout, correct? This was your breakout area. This candle, what it did was it came and retested the top of bar one and it went back up. So now it retested the bar, it retested the breakout point, it went back up, thus creating your breakout gap. Correct? This now becomes your breakout gap. What EMA are you using? Which time frame? So I have, if you look at the settings here, I have the chart EMA on 20. This is a 5 minute 20, 1 hour 20 EMA, 4 hour 20 EMA, 1 day 20 EMA, and 5 minute 200 EMA. This is all I have. Okay, so it created this thing, the breakout gap, and we went back up. Now, what was our first target? Our first target was here, right? We reached that. But see the strong bar. I kept on holding to my long, and then the idea was if we wanted to reach this midpoint of the 4 hour channel, if you remember, it will go to the high of the day, the Globex high, and we went to the Globex high and we took our profit there. So this was the whole thought process behind this. Correct. When it came down, I did not short, because after this much, if I'm trying to short here, I consider this a knife catch. Yes, you can scalp, but I was not interested in the short. However, what happened is we came back to the breakout gap. And we immediately bounced. Correct. I went long here again. Considering this as the support, I went long here again. And then once this candle happened, I went long once more on top of this. I was thinking that we will come to at least this line or to the top again. It did not happen. When this candle happened, we came out. Okay. Now again, if you see what is happening here, if I remove all the drawings from here right now and including the indicators, this was your bearish gap created. Correct. We went above, we came below. Now whenever you see that you have a bullish gap and a bearish gap, or you can even say this, right? Whenever you have a bullish gap and a bearish gap, you create a TTR, a tight trading range. Okay, a tight trading range above the 20 EMA based on the context gives you a bull flag. Okay, so there is still chance of going up. And how much you will go up? You can actually just do a 1:1 of this. See, it came here and immediately they started selling. Correct. So that is how you define the targets and where you should take profits and where you should hold your runners. But again, as soon as this happened, similar to this bar, you see, this bar is absolutely opposite and similar to this. We came out of the trade below this candle. There is no point in holding on to it anymore. However, it went up 2 more legs here. I was not a participant in this anymore. Now what happened? Here is something interesting that happened. Okay. Now what happened here? See, this bar and this bar, these two bars. Let me bring in the bar count. So bar number 145 and bar number 150 are absolutely similar bars. Correct? Now, when this happened and we had these two highs, I already had my line drawn here. When this candle happened and it came down and it did not get a follow through, I was of the opinion that there is a big probability that it will go up and touch this line. This is what I wrote in Discord as well. When it touched this line, it came down. Now, when it came down, this is again a reversal candle, right? But after such a move, we can easily form a TR. In order to see whether we are forming a TR or not, you have to make sure that something is getting broken, some bear gap is being created. So those are the things that we need to look at. Now see what happened. Let me bring back the indicators here again, the EMA indicators. Now, this was our 20 EMA on the 1 hour. Now, am I looking at the right thing? I have to look at the RTH now. Correct. So this is the 20 EMA, right? Now what we see here, what we saw here was this was the previous high. Correct. We came above the previous high and then closed strong below it. So this itself is telling me that maybe this was a false breakout, but I cannot enter a short trade yet here. I have to wait for my setup, because you never know. This we got this, we got this. You never know whether market wants to do another leg to complete this wedge. So you have to wait for that setup, right? You will have to wait to see what is happening. Now, what happened here? We came and got support at the 20 EMA, right? We even had a double bottom here. We even had a double bottom here. We were bouncing from the 20 EMA. We bounced once, we bounced twice. This was the third time it tried to go up. But if you see, none of the time we were able to create a strong bull bar, which was indicating that, okay, this can actually go up. Uh, we were not creating a strong bar here, and we were creating a trading zone. Now, this trading zone, the trading range was getting created, which is telling you that, okay, if I have a tight TTR above the EMA, we know that it's a bull flag, right? As long as the EMA does not break down. Now, there was one more thing that happened here. So if you see, where is it? Where is it? Where is the pen? The pen is here. Here. We had a shoulder, head, another shoulder, right? And at that point of time, I mentioned in the group that in the Discord that if we come below the EMA, we may get a very good short and a retest of the bar one high again. Okay, and see how it happened. We shot it. I did not shot right here. I actually shot it below this. I kept my stop order below this double bottom. Actually, two ticks below this double bottom, because many a times one tick becomes too tough. So as soon as I kept it two ticks below this double bottom, because many a times what happens, if it wants to do a liquidity grab, it will come here, it will grab the liquidity, and then it will go straight back up. But I took these rejections, and I took a shot here, and my target was the top of bar one, and we got the top of bar one. Okay, so this is how it happens. Now in the morning, how was I getting my levels? So as we said, my first target was, even if you see that target will match with this TTR that got created the previous day. So this was the first target area, correct? Now we have 1, 2, 3 bars. We are bullish. We know we want to go and hit the 4-hour channel midline. Now we take our fibs. We draw it on the 15-minute. This 6.7 or 6.8, I think it's a bit thick or small. 67.65 was my first target. This is based on the 15-minute bar. Okay, so the 15-minute bar is bullish. We got a follow through. It will want to do a 1:1 here. That is how I got the 67.75. What I see is, even after bar 6, okay, we are getting rejected here. We did take profit here, correct? Now after bar 6, what is happening is, when you are here, you will try to see that, okay, if the market goes up, it will go up to the 78 level. And if it goes up to the 78 level, there is a very high probability it will go and touch the Globex high, because that is just around a couple of ticks there. So then that was my target. But if my target is 80, I normally keep my sell order. If we were long, I normally keep my sell order 3 ticks below 80, because many a times it does not go and touch the whole thing. And if I keep it exactly at 80, it has to go to 80.25 in order to fill me. Right, so that is why I keep it 2 to 3 ticks, even sometimes a point below my profit target. So this is how we got it. So this was the basic thing. Now if you see, in order for price to move up after a strong down or a strong up, you need to create gaps. Okay, let us see here. Let us take a day that dumped. Yes, let us look at this thing. Okay, so we had this big dump at the open. We went back up, we tested the OOD again, and we came back down. And in the process, what we did was we created a gap. Correct. Now we came and retested the gap. This guy came and retested the gap. We created a kind of a double top here, or a triple top here around, and this is kind of again a head and shoulder structure, right? If you consider a micro head and shoulder, there's a micro head and shoulder structure. So although we created a gap and we are bouncing from the gap, we are still too far from the EMA. This was a big leg down, so you are expecting some more down. So even if you were short below bar 1, you took the 15 minutes ORB, you came down here. Even after that, even if you come up here, we are not getting another bull bar that is created above this gap, right? And after this, you want a retest, and then you want to see that the price actually is trying to push away from this gap. So after 1, 2, 3, 4, 5, 6, 7 strong bear bars, one bull bar or two bull bars does not mean anything as long the gap is created and it is retested and starts going back up. Okay, so this gap got destroyed by this candle and this candle, correct? And in the process, what happened? It destroyed this gap and it created a new bearish gap again. See where we started getting rejected the next day and we came down all the way. Okay, now once this gap was there, we came all the way down and see here we created this gap again. We bounce from this gap, but now will you go long? Why will you not go long here? So this is something that I learned at the Orlando meet from Ali, right? You will not go long here. If you had not gone long here to scalp the 20 EMA, you will not go long here because the 20 EMA is less than 1 ATR away. Okay, since the 20 EMA is less than 1 ATR away, you will not go long here. You will actually wait for your setup above the EMA to form before you enter. Make sense? So as you see, we got this gap created. We came down below this gap. Now this is the TTR that got created, and this TTR is where now? Below the 20 EMA, which is now telling me that there is a big chance that we dump back again, right? And then what will happen? We had the first down, we had the second down, we had the third down, we had the fourth down, right? So many times as we hear, the wedge may take actually 4 touches before it starts to move back up. So this was the fourth touch. Now let us look what happened here. After we dropped here, no bull gap got created yet. Even after the third touch, we went back up and we immediately got a reversal inside bar. Not exactly an inside bar, it actually trapped the bulls here again, created a double top, came down one more leg. Now once we had this candle and it was failing to wait or failing to close below this again, the lower low. Now this is telling me that if we close above this level, this will be a false breakout, because this is the level from where this breakout started. We broke out of it, we could not hold it, but we need to come up here. At this point of time, you see we created this nice bull gap at this point. Or even then, even if you say that that is too late, this is our bull gap created. And when your follow through bar or the bar response, the third bar responsible for the creation of the bull gap is in the same color as this, that becomes your strong point, right? So that is breakout plus follow through. And this is a multi-bar reversal. It reversed almost 3 bars here. We created this big gap. We got a follow through. You go long here now. Although this is near the 20 EMA, you will go long here because of the fact you had 4 touches. You had 4 touches, and in this whole process, this was the first bull body gap that got created. So you cannot sit here without taking the trade. You have to take the trade here. Okay, and when you took the trade, you will say that okay, if a bar closes below the 20 EMA, we will come out 1 point below that. That will be your idea, right? Do not keep a 1 tick stop loss or a 1 tick profit taking. If your stop loss is at X, for a long trade, keep your stop loss at X minus 3 ticks. Okay, so that you do not get taken out by a sudden dip. So if my stop loss is here, I will actually keep it 3 ticks below that. Okay, now what happened here? We had a double bottom here at the 1 hour EMA. Right here, my 20 EMA has just crossed over 1 hour EMA. So these are all telling me that there is a big chance that this is going to get a good leg up. And if I want to find out how much it wants to go, I will again, so I do not consider wicks while I do measured moves. I try to be very conservative, and if most of the times I have seen, if I am taking wick to wick, it normally does not give the whole measured move, right? So what I do is I start from the body, I go to the body. Okay, even if you see that I will come out if it goes below the 66% line. Not there, it is much higher actually. Okay, if it closes below the 66% line, you will come out, or below the 1 hour EMA now, you will come out. And we got our measured move here. Okay, see, this was the previous bullish bar that got created. This was supposed to be support, but it became resistance. Correct. So when you are seeing resistance here, your stop loss will be, if you will not keep your stop loss here anymore, right? So once you have this resistance, you will say that, okay, if I close one candle below the 20 EMA, I will put a stop order, or the stop entry 3 ticks or 2 ticks below that candle that closed below the 20 EMA. Okay, you are still in profit. You have entered here. You have entered on this bull gap thing. Okay, and it went all the way up. Now, if you see in this process of going up, we have been in TTRs, we have been moving up. None of the cases we created a bearish gap. We did create one with this doji and this, right? But then immediately we went and broke it up. We came down here. Now you can say that, okay, we came down from above the gap, and there may be a short opportunity here, but it never got filled. And you have this micro channel up. So you are expecting that, okay, if I have a micro channel, if the bulls could bring it back here, they can take it a lot higher, right? So you have to hold on to at least one runner to maximize what you are seeing on the screen. Apart from that, what I also do is I draw the fibs on the whole day. Okay, I draw the fibs on the whole day. Now this becomes my 50% line. So if I cross above the 50% line, see, this is where the rejection started happening. Correct. But we had one candle up, two candle up above the rejection line. So this was my breakout. It came, retested the breakout, and we went back up. And now, if you are saying that, okay, I will buy above this red candle, and if you are trying to get aggressive, you will say we should get 1:1 of this. You actually got 2:1 of this. Right? So these are the different things that I look at while I decide how to enter a trade, where to enter a trade. And on top of that, I also make sure that in the pre-market and during every hourly close on the, excuse me, on the ETA chart, I keep on marking my bullish and bearish gaps on the higher time frames. Okay, I look at the 30 minutes sometimes, but mostly 1 hour and 4 hour. 4 hour, it happens only twice a day, right? You will see one 4 hour complete at 10 o'clock, and you'll see one 4 hour ETH complete at 2 o'clock. So those are the two times I keep an eye on all those things. More than that, what I learned from Al Brooks is, if I remove everything and I bring back my bar count, you have 81 bars in a day, right? So among this 81 bars, divide your day into three parts, from 1 to 27. Okay, let us close this. The next section comes from 28 to 54. And in the next section comes from this, right? If you study this thing, the 27, if you study the three sections of the chart for around 100 days, 50 days, 250 days, you will find how the reversal happens, where the reversal happens. If there is a strong bearish day and we want to go back to the 50%, the reversal happens, as Albrook says, between bar number 40 and 50, right? And that happens in this second box. So if you look at bar number 18, this was our bar number 18. If we cannot hold bar number 18, we will come down. We have not seen the low yet. And if we keep on going up from here, we come back, take support at the bar 18 high, and then there is a chance of going back up. If the bar 18 is broken down in this second box, you will have one more leg down. That is what I have normally seen. And then around 12:30 to 1, the actual magic of going back up starts. This was the spike. This was the two-legged pullback. What do we know? Pullbacks create channels, right? When there is a pullback, that is what creates a channel. And see, we created this nice channel here. And we continuously closed two bars above the two bull bars above the midpoint, and we did not close a single bear bar, close single bear bars below the midpoint, but we had no follow throughs. So we know that a channel is a trading range which has a inclined angle to it. That angle may be a positive angle. If it's bearish, it will be a negative angle, right? So when we are in a trading range, you know that big bars are actually sold off. If there is a big bullish bar, it is sold off. If there is a big bearish bar, it is bought out. Same concept here. All the bars were big. Whenever they were coming down, they were buying it. Whenever it was coming down, they were buying it. And finally, what is the other thing that we know? 80% of the time, the breakout of a channel fails, right? It cannot break out. We tried once, we tried twice, we tried thrice, we tried four times. Let me mark it here. Once, twice, thrice, four times, right? 80% of, understand this. I actually asked this to Al in Orlando that, okay, you're saying 80%, but when do I know that the 80% is getting over? He said, if it did it four times, your 80% is done. So out of five times, if the four times have failed, the fifth time it tries again, it will become successful. Okay, so that is how your 80% comes. So you tried once, you failed, you tried twice, you failed, you tried thrice, you failed, you tried four times, you failed, the fifth time you broke out. Okay, and this was the end of the day if you have broken out of here. See, and then again, if you see here, this is our balance zone. Let me remove these boxes. We created a balance zone, right? We created a bull gap out of this balance zone. Let me remove the channel as well. See, there are so many ways to arrive at the same conclusion. It does not need to be that, okay, I am doing it this way, that's why you have to do it this way also. So there are so many ways to come to a conclusion. This is my balance zone. Now we created a bullish gap outside this balance zone. Okay. If you're not comfortable with channels, this is what you do. So this is the bull gap. Okay, this is the bull gap that got created here. And once we got this bull gap, we came back down below the gap. We found buyers. So buyers are there below the gap, right? And we shot up again. We came down, retested, retested, retested. You can even scalp here. If you keep your stop loss here, one tick below this breakout candle or two ticks below this breakout candle, and then you see that, okay, we have a breakout, we can get a 1:1 or a 2:1 of this breakout. It came down here. Now, if you see, this is a breakout candle. This was the body gap that got created. What did we break out of? We broke out of this particular line, right? This is the line that we broke out of. Now, since we broke out of that line, we came back and retested it here. Sorry, what am I saying? We broke out of this range, this particular range, right? This was our balance zone. We came and retested this and went back up, thus creating my breakout gap. And see what is happening. It's coming to the breakout gap, it's bouncing. It's coming to the breakout gap, it's bouncing. It's coming to the breakout gap, it's bouncing. So this is your buy zone. So do not forget how the market ended yesterday. Keep an eye on the balance zones that the market has created. See, this was the balance zone. We came back here, right? And we went straight back up. So these are the things that you need to look at. These are the things I look at when I try to decide whether to go long, stay short, or do nothing. Correct? And in a TTR, when you are realizing that we are in a TTR, right? See, once you are long here, if you have not taken profit here and you're seeing this, you have seen this, you are seeing that it's a big up, big down, big up, down concept. Immediately define your TTR. This is your TTR. Now, inside that, okay, we are moving sideways. Is there any gap here? Yes, we have a gap here. Every market is red. We have a gap here. We created a gap. Are we holding the gap? Yes, we are holding the gap. At that point of time, if you have created a gap right above within your TTR and you are not breaking that gap down and you are trying to go up, there is a chance of what? Of doubling this TTR. Correct? First target, second target. That's how you take your profits. Okay, so whenever you find a TTR, you know that it's a balance zone. Now you see, okay, what is the context? Have we been in a have we been in a continuously upward motion? Okay, yes. Now, is there a wedge getting formed? So these are the different steps of defining a trade. Is there a wedge getting formed? Am I 5-6 points a scalping distance away from the expected wedge that I am looking at? Okay, enter the trade, come out at the wedge, right? And then wait for a reversal. Or you keep on holding one contract as a runner to see if the wedge actually breaks out. Correct. So if you see here, we had a wedge. We had a wedge here. We broke out. We never came back below it. And that was this breakout. This was follow through, and we went out. Now, if you want to see that, okay, if this is the breakout of the wedge, I should get 1:1 of this. What is breakout of the wedge? Your candle that broke out, the low of that body, and the follow through candle. You will take those two and extend it to the top to see if you get 1:1. Whenever you see a gap, whenever you are getting a gap and you're seeing, right, that even if this is a tight trading range or this is a regular trading range, you have to know your gaps in order to see that whether the price is trying to break it and failing, right? So that is what we have to see here. Even if you see this created a small trading range here. You remember what Albrook says, that in the 5 minute chart, a trading range may be a single bar. Maybe this was that single bar, right? We broke out of it, we created the gap, and we kept on going. So these are the different ways that you have to look at it. Again, if you are in this day right now, if you're in this day right now, this is the top of the day, high of the day, this is the bottom of the day, this is the midpoint. See where the magic is happening. Once it goes above the midpoint, holds the midpoint area, you have to consider that, okay, it is going up to the top, or it will break through it and create a bullish day or create a bearish day. So this 50% line, after the first 2 hours or 3 hours, once this 50% line has been formed, this becomes a magnet and a decisive area. If the 50% fails and we come down below the 66%, we are targeting the lows again, or this bottom support area again. Okay, so that is how you have to look at these things. So keep in mind this 50% line of the day. So in Ninja, Thomas has an indicator already, right, which is free. I am trying to create one something similar for TradingView. I should be done by tonight. I will post it in our Discord once that is done. So this 50% line is really important, and you need to keep an eye on that. Okay, any more questions?
So Buj, in this 50% area, since now
Mhm,
we broke the highest point, right, of the opening.
mhm, mhm.
If you extend your indicator, did we bounce back again from the 50% area? If you move the
See, we went above the 50% area.
yes.
We did not close it. We closed it here. We came down here, but after this move, do you see a good bearish body gap?
No, no,
This
I
is a
got
bearish body gap, right? But look at the candles.
yeah, I got this point. This is perfect. I'm saying, like, you see, since it went up all the way, the candle number 64, right?
Candle number 64.
Yeah.
Okay.
If can you extend your indicator to the highest of the day, the top line? I
Okay.
want to see when. Okay, now it
Okay.
bounced back again from the 50% area. Second time, you
Correct.
see? Yes,
Correct.
this
So
is the
you
second.
have to keep on, you have to, whenever you see a new high or a new low, you
Yeah,
have to keep on moving your 50% line. So that is
exactly.
why I'm trying to make something like a 20 EMA, a 50% line will be there. So that is what I am trying to create. Once that is done, so you will not need to put on your fibs to find out the 50% again. It will keep on drawing the line for you and it will be much more easier.
Yeah, it makes very good sense because first time it bounced from like one of the scenario, right? It bounced from the
Yeah, so
50%
it's the same thing
area.
happened on Friday also. On
Again, it
Friday
bounced from
also,
the
we moved
50%
up.
area. Yeah.
Correct. Correct. Okay. Gaps are formed, the gaps are retested before the market starts moving. Okay. So it takes time to realize, understand, assimilate the process. And then that is learning. After that, the next biggest thing is execution. Okay, you may have all the knowledge in the world, but as long as you cannot apply the knowledge, it does not make sense. So that is why it is very, very important to do sim trading, to do back testing, to understand how the market moves. So with all these concepts that I keep on describing in the videos, go back, try and see what you are missing, try and see what is your edge, look at your winning trades, look at your losing trades, try and understand why a losing trade happened. I have seen myself that as soon as I understood the gaps, my losses got reduced by almost 60 to 70%. See, again, if you're still scalping here, right, after 330, we came to the 50% line, we created a gap, right? Okay, so you are not interested in trading now. You see it came and retested the gap here. This is 335. You will say, hey, if we are still bouncing above, we bounced here from 50% line, we bounced here from 50% line, we bounced here from 50% line. I still have half an hour. Let me see where we can go. Can we actually go to the 50% of this drop? Let's see what happened. Okay, this drop started here, we came down here, and we went back to the 66% of this drop. When you are in a downtrend and you suddenly see a bull gap getting created, give your whole attention to it and see if it's holding. If it's holding, you have to come out of your shorts. You will have to see whether it's breaking down. That means that is the first reversal. It is not going to work. It will come down again. But sometimes the first reversals even go a long way to the top of the climactic bar, right? And see, that is what happened. And that is where we started getting rejecting again. Correct? Now, the next day, you will see that, okay, we started here. Correct? This was our body gap. Okay. HOI, COI, everything is there. But this was the bearish body gap where we ended. So if your price comes down here and starts getting bull bars, you have to be confident that, okay, there is a big chance that, okay, it tested. Now this gap has become your support area, right? We broke through the gap. Now this is the first bar of the day. If I say that we have just started and this was, let me change the color. This was the first bull bar of the day, right? Which was not a part of RTH. And since we had a gap up, we want to come down where? To the bottom of the bull bar. And the bottom of the bull bar is actually the COI. Correct? Now we did not come back to the COI and we were getting support right here. So if you have this drawn on your chart, you know that there will be bulls here. You know there will be bulls below this because this was the area that got broken out. This was the area that got broken out. It's just a retest of the breakout area. Correct? And then see, when we were coming down, we had two legs down, right? One up, two up, three legs down actually. So that means whenever you see three legs, we have a wedge. Once we have a wedge, we created a bull gap and a strong bull gap. Look at the size of the candle. Okay. So at this point of time, what is your target? Your first target, top of bar one. Okay. Once your target is done, then you look for these things. Okay. It came down. Okay. 15-minute ORB. See, these levels become important because you see market response to it. It broke out, it came back to the 15 minutes ORB, created a gap, and then what did it do? It got your 30 minutes ORB. 1, 2, 3, 4, 5, 6. So this is the lowest of 30 minutes. This is the highest of 30 minutes. You got your 30 minutes ORB, right? And the market kept on going. And the market kept on going till when? If you see again, this is my channel. This was the spike. This has created my channel. Correct? First touch, second touch, third touch, Every time we have been breaking out. And the interesting thing about this channel is the 50% line of this channel is actually working as support. Correct? So which means this is a pretty strong channel. Okay. Now we broke out the next day. How did we break out? Let us see this and then we will end it today. How did it break out? This was the body gap that we had. Okay. We kept bouncing from here, we kept coming back here. But at one point of time, we started going back a lot below. Now, if you see here, this is our bearish body gap, right? Since we have now a body gap above, a body gap below, this started being a tight trading range. This started becoming the balance zone. We broke out of the balance zone. If this was the balance zone, we broke out of it. We created a bear gap. Did we create a proper bear gap here? This was kind of the bear gap inside the balance zone, the last bear gap, right? So this was the beginning of the day. We started in a TR. This was the first bear gap that got created, and we started coming down from here. You have to tell yourself that maybe we are trying to get to the bottom of the candle, which was responsible for this bear gap, and that is here. And see, we touched that. We touched that. And as soon as we touched that, we created a bull gap here and we went up all the way. So you are not going to enter here because the first candle is red, second candle is green, third candle is also red, right? So you know that there is a bull gap here, but you are not entering here because this has been a very strong move. You will enter above this and you will say that, okay, this is where H2 is. I will try to go up. How much? What is my target? I will first try 1:1 of this bar. See, and we came back to the same, the last bear gap that was there.
And I see
Okay.
25, candle 25 is a bear gap. Looks like it's kind of stopped there.
Yes, yes, yes. So
25.
once it broke out of this tight trading range, it created this bear gap here. Right? And now, if you see the tight trading range was my breakout area, this has now extended. It becomes a bit confusing at first, but then once you start looking at it, you will become more confident, right? This becomes my breakout gap now, and that is where we came and created a TTR at the end of the day. However, this was above the 20 EMA. The 20 EMA was somewhere here. We went up this much. We created a bull gap, and then the next day we went back up. We broke all these supports, all these resistances, went back up, and then we started coming down again. That's what happened in the ETA charts. So that is all I had for today. Please let me know if there are any questions. I will upload this recording on YouTube as well. And if you are already not on my Discord server or on the Facebook page or have not subscribed to the YouTube channel yet, please do that. And we will have another session next Sunday. So every Sunday we have these sessions, and we discuss the topic midweek sometime, what to do, what to discuss, what not to discuss, and I ask the people what they want to understand, if they have any questions. And okay, so that's how I run these video sessions. So please go and subscribe to the channel, like, comment, share the videos, and I will see you guys again next Sunday. Make sense? And by the way, tonight I will from this week I am starting to do my plannings in a video. So I will upload the plan tonight on my YouTube channel. I'll create a new playlist saying that it's the next day's plan, and then at the 8:45 call in the morning, we will go through what the plan was, what happened overnight, and finalize that detail, and then trade with that plan for the rest of the day. I'll stop the call now, and I will see you guys again next Sunday at 11 o'clock. And the link will be the same. So if you bookmark the link, or I have it saved on my Discord as well. Okay, thanks everyone. See you next week. Bye.